Alison, I want to start with you and this FIC miss from Citi. What's your take?
So I guess we're going to want to hear, was there any sort of accounting impact were there any one-timers? As you said, JP Morgan looked like a beat. It was probably about in line, perhaps a little light, depending on what the actual adjustment is from them. But we'll want to hear sort of, I guess what the puts and takes are in terms of strength. We've heard from JP Morgan, the emerging markets business was strong, currencies was strong. Citi is generally strong in both of those areas. But the rates business, another area of strength for both those banks, not as good. Credit, again, not as strong. I think the other thing is I'm looking across both the reports, Wells Fargo's cost ratio coming in much higher than its target. My question there is, are there some legal costs in there? They've been sort of accruing those, trying to get the Department of Justice settlement behind them. Also costs related to some of their other issues. Barclays actually settled their lawsuit with the U.S. Or announced a settlement in the past quarter for less than what our expert Elliot Stein had thought based on previous cases. So that could bode well for Wells Fargo, but we're going to want to know what's in that number because it is a lot higher than their target.
So, Alison, it's early going, but explain one thing to me right now. I thought we were going into this thinking there'd been a lot of volatility in the first quarter, and therefore trading should be much better. Because when trading was not doing so well, we heard it's because there wasn't volatility. So, are we seeing that yet reflected here? What effect did volatility have on trading?
I think we are seeing it. It all depends about the comparison, right? So, if you look at revenues versus fourth quarter, it's up 50 to 100%, right? So coming from the weak fourth quarter, and we do normally get some seasonality, but again, a bigger jump due to the volatility. If we look year over year, remember that last year was a very strong quarter. So coming in flattish against a very strong quarter, still strong, just not stronger.
And I should point out, we're getting some more details on Citi. So investment banking saw revenue there fall 10% to $1.1 billion. Doesn't feel like a big surprise because JP Morgan's investment banking revenue also came in light. But equities nailed it, up 38% to $1.1 billion. Again, echoing what we saw from JP Morgan. The equity trading business really strong, probably bodes very well for Morgan Stanley. Tony, I want to get your take. You own some of the banks. What bank is best positioned to take advantage of rising volatility in equities as well as potential rising interest rates like LIBOR?
Well, I think you saw very strong results from JP Morgan this morning, and I think that that's because they are very well positioned to be able to dominate on those items. They're in a place where they're playing offense, and they seem to be winning. I think that probably anyone that owns the stock this morning is very happy with the results, more or less across the board that you saw in JP Morgan, and they're setting up very well for the future and to be able to continue to dominate.